Hello and welcome back to a weekly market recap. I'm with Rich.
Hello, everyone.
And I'm Knight. Let's get to it. This past week, we saw the market up 1.16%, which brings us up year to date 11.92%. So the market did reverse its course from the previous 2 weeks. We are now on a slight uptrend. And really, the two leading factors are some of the positive economic data that we've seen come out over the week. And also, we're starting to see some more details along the infrastructure bill with Biden and some benefits of maybe it not even being able to pass at such a large dollar amount, which means some of the negative pieces like increasing taxes also might not be able to go through with it. As we see, we started off the week with a pretty significant jump. And from that jump, we stayed relatively flat. We had some downward movement, a little bit of upward movement. But really what we can see is most of the gains we made are all from the first day.
Yep.
And so what that shows us is the biggest moves that we had, there might have been a little bit of an oversold the last week due to some of the inflation fears. As we're slowly moving away from that or even pricing that into the market, we're not seeing as large of these jumps, at least not this week. So, Rich, what's some of the positive economic data that we saw come out this week?
Hiring looks pretty good. Unemployment looks good. Economy looks much stronger than what we were expecting. The pandemic seems to be more and more under control. Going into Memorial Day weekend, looks like a lot of people are going to be traveling, which means a lot of people are going to be spending money. As you know, approximately 70% of the economy is driven by consumer spending. So if consumers are traveling and spending more, that bodes very well for the hospitality industry, which has been one of the hardest hit sections of the economy. Disneyland and Disney World and Six Flags seem to be opening up for much larger groups, and theaters are opening up. All of these were very significantly affected by the pandemic. So this is all good news.
Yeah, there's a lot of good news. One thing that I did actually find surprising, though, was pending home sales. That dropped significantly in April. So we were expecting a 1% increase, and we actually dropped 4.4%. And it shows that the housing market might be slowing down a little bit, specifically around selling. And I'll be curious to see whether housing prices end up coming down. As we've seen over the past year, we've seen this incredible run up in housing prices that's really been led by interest rates falling, by the lack of supply. But are we starting to see a reversal, and maybe prices are so high that people aren't looking to buy maybe in 2021? And if that's the case, the demand starts to drop. Will we start to see prices come down, maybe back to a more realistic level, and start to even out that way?
That would be a good thing for the economy long term.
Agreed. And then the last piece that did come out was core inflation for April. We were expecting a 0.6% increase for April month over month, and we got 0.7. Again, not super high, so it's still higher than what was expected, but within a little bit of tolerance. It's a very high number, but we all know that we're currently experiencing inflation. The question is, are we going to continue to experience inflation in the future months? So I think that's another reason why the market didn't shift dramatically on Friday when that number came out. And the next piece that was affecting the market is really around Congress and the infrastructure plan and whether or not it's going to get passed. Now, I think the economy would benefit from some infrastructure, but I also think, especially with inflation coming back in a big way, Congress and DC has been really aware of what are the impacts of another $4 trillion in stimulus going into the economy. Is that going to overheat? What's that going to look like? Now, Republicans came back with a proposal around $900 billion, so less than $1 trillion, which is very different from the $4 trillion. And right now it feels like they're pretty far off, but I don't know if there's that same emphasis on timing. We really want to get this out like there was maybe back a couple months ago before all these inflation fears.
In addition, there's a piece about Majority Leader of the Senate, Chuck Schumer, and the fact that there were some pieces in the Democratic proposal that are not good for the state of New York and his election chances. And as a result, he may be more willing to work with the Republicans to eliminate some of those items, such as the very high tax rate on corporations and wealthy individuals, which hits New York much harder than other states.
Yeah, it was interesting that Schumer actually came out and said that he was not in favor of using the budget reconciliation to pass this infrastructure plan. Again, if they used the budget reconciliation, they would only need 50 votes. But if they can't get Schumer, they need every single vote. And if they can't get Schumer to agree to it, then there's no way that it would pass. And thus, they would need 60. So Schumer's already come out and said, hey, I don't feel comfortable using budget reconciliation for your infrastructure bill. It's not really a budget. So for that reason, let's work with Republicans and find something where we can get 60 people to sign on. Now, I could see Schumer switching that stance in the future if a few things are cut out. Was he using that as a negotiation tactic to get some of the pieces that he wanted out of it? If the infrastructure bill gets pared down from 4 trillion down to maybe 2 trillion or slightly less, I wonder if Schumer would then be willing to sign on. But as of right now, that is his current stance. And I think the biggest impact it has is we're kicking the can down the road. This isn't going to be a smooth bill process. It's going to take probably at least another 5-6 months at this rate.
Which is something we've been witnessing with Congress for the past 20 years. They seem to be very good at kicking things down the road and taking forever to get a bill passed.
Yeah, no, I think that there is a benefit of, because of all this fear around inflation, I think if inflation is transitory, which we'll probably see numbers come in September that would either confirm that thesis or prove it to be wrong. I think if we come in that inflation is transitory, there will be a lot more motivation in Congress to be able to throw a lot more money into stimulating the economy. If we are seeing those numbers come in that, oh, we're still seeing inflation really high and this no longer feels like it's just transitory, we're seeing some systemic issues, I think then Congress wouldn't want to inject that much stimulus into the economy. So I do also think there is that at play. There's almost this tactical, well, let's hurry up and wait just to see what's going on currently in the economy to make sure that we're not going to actually cause more damage. It also could be wishful thinking. You maybe I have too much respect for the people in Washington and they're not actually thinking about that, but that would be my dream scenario that they are. Anyways, we appreciate you guys tuning in. As always, we're here to support you. Your money's here to support you. Please slap a like on this video, subscribe to our YouTube channel, share this content with people who you think it would help. Write comments down below. It really helps our channel grow, get this information out in front of more eyes.